Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Fortress Biotech's latest proxy statement, and let me tell you, this one has a little bit of everything. Director elections, accountant approvals, and even some potential get out of jail free cards for executives. Sounds interesting? Well, buckle up, because we're about to break it all down. First off, what is a proxy statement? Think of it as the company's way of asking its shareholders for permission to do certain things. It outlines what they want to achieve, who they want on the board, and how they want your shares to be voted if you can't make it to the annual meeting. This year's annual meeting is set for June 17, 2025. Shareholders will be voting on several key items, from electing directors to approving the company's choice of accounting firm. Pretty standard stuff. One of the main items on the agenda is the election of 7 directors for a 1-year term. These are the people who will be guiding the company's strategy and making important decisions. The nominees include names like Lindsay Rosenwald, who's currently the chairman, president, and CEO, and Michael Weiss, the executive vice chairman, for example. The shareholders will also be asked to ratify, that is, approve the appointment of KPMG as their independent registered public accounting firm for the year. This is basically giving the thumbs up to the folks who will be keeping an eye on Fortress Biotech's finances and making sure everything is above board. This is a relatively routine matter, which means your broker can vote your shares on this even if you don't specifically tell them how to vote. Then there's the advisory vote on executive compensation. This is where shareholders get to weigh in on whether they think the company's top executives are being paid fairly. It's non-binding, meaning the company doesn't have to listen, but it's a good way for shareholders to voice their opinions and hopefully be heard. Another advisory vote is on how often they should hold this vote on executive pay. That is, do they need to do it every 1, 2, or 3 years? Now, here's where things get a bit more interesting. The company wants to change its corporate charter, that is its rulebook, to protect its officers from certain kinds of lawsuits. This is called officer exculpation, and it would shield them from personal liability in some cases. Now, it's important to note it will depend on the nature of the conduct. Think unintentional mistakes versus bad intent, but this is a pretty bad intent, but this is a pretty big deal. To make all these changes, they need a yes vote from a majority of all outstanding shares. Abstaining or not voting at all counts as a no. The filing also sheds light on how much Fortress Biotech pays its independent accounting firm, KPMG. For the year that ended in December 2024, KPMG billed them about $3.8 million for audit services, which include checking their annual financial statements, quarterly reports, and other filings. There were also some tax fees, but nothing too crazy. Digging in a bit, KPMG made $55,029 for professional services in tax compliance for the year 2024, about $10,000 less than the previous year. The audit committee, which is responsible for monitoring the company's finances, has reviewed everything and given it their stamp of approval. They've met with management and KPMG to discuss the financial statements and make sure everything is in order. How much stock do the big bosses own? Well, as of April 17, 2025, the directors and executive officers together control about 27-29% of the company's stock. That means they have a pretty significant say in what happens at Fortress Biotech. Time to talk executive pay. The proxy statement includes a summary compensation table that shows how much the top executives made in 2024 and 2023. Let's have a quick look. The table reveals that Lindsay Rosenwald, the executive chairman, chief executive officer, and president, made $1.3 million in compensation in 2024 and $1.1 million in 2023. David Jin, the chief financial officer and head of corporate development, took home about $2-3 million in 2024 compared to $1.4 million in 2023. Michael Weiss, the executive vice chairman, strategic development, made about $1.2 million in 2024 compared to $962K in 2023. As of December 31, 2024, there were about 3.7 million securities to be issued upon exercise of outstanding options, stock units, and rights, with a weighted average exercise price of 1.78. There were also another 9 million securities remaining available for future issuance under equity compensation plans. For the years 2024, 2023, and 2022, Dr. Rosenwald got $1.3 million, $1.1 million, and $1.2 million respectively. So while it seems like total compensation is low for the CEO, we need to look into the equity parts. It looks like, based on the copies they received, everyone filed their forms on time, not much to see here. Now, let's move on to related person transactions. These are deals where the company does business with its insiders, like directors or major shareholders. These deals aren't inherently bad, but they need to be carefully scrutinized to make sure they're fair to all shareholders. For example, in September 2023, one of their subsidiary avenues sold some stock to Fortress Biotech and Dr. Rosenwald for about $550,000. The filing also talks about founders' agreements with various subsidiaries. Basically, Fortress Biotech provides some initial funding and expertise to these companies. And in return, they get a cut of the profits and a controlling stake in the company. In addition, the company has management services agreements with partner companies. Per the contract, these partner companies pay Fortress Biotech to manage their businesses. A 5-year agreement gets renewed unless someone breaks the agreement 3 months prior. Finally, the board states that there are no further matters to be voted on. Of course, if anything pops up at the meeting, the proxy holders are authorized to vote as they see fit. Now, what are we to make of all of this? Well, Fortress Biotech seems to be operating as usual, and their relationships with their partner companies are a critical part of their strategy. A large portion of their business model relies on outside partner companies. A key element of Fortress is the chairman's relationship with business partners. One risk of that is the complexity of the business model. Another might be the risk of losing key personnel. The proposed changes to shield officers from liability could attract and retain the talent they need. Overall, it's important to read these proxy statements carefully and make informed decisions about how you want your shares to be voted. If you don't vote, you're basically letting the company decide for you, so take the time to make your voice heard. Thanks for tuning in to Corporate Decoder. If you found this helpful, be sure to like, subscribe, and hit that notification bell so you don't miss any future decodes. Until next time.